In this video, I'm going to talk about one of the most essential trading strategy for predicting next move of markets, which is called candle range theory or CRT. Hello, I'm Dr. Trader Amir and welcome to my YouTube channel. At first, let me tell you about what is CRT in trading. Typically, candle range theory is comprised of three candles. First one is just a regular range candle with upper shadow and lower shadow, and this is the first level of candle range theory. Then we are going to draw a line at the highest point of upper shadow and lowest point of lower shadow. Second candle is so essential because its upper shadow should cross the highest point line of first candle. Additionally, the body of second candle should not cross the highest point line of first candle, and it is a vital condition. In third step, we should draw a line at the lowest point of second candle. Since the second candle's highest point crosses the highest point line of first candle, we can predict that the third candle's lowest point will cross the lowest point line of first candle. And this prediction is based on the rule that market always moves from one level of liquidity to another level of liquidity. In CRT, the highest point of second candle is the first liquidity and lowest point of third candle or last candle is another liquidity. The crucial condition is the body of third candle should be lower than the lower shadow of second candle, and after this position we will go for short position. And if this condition does not happen, trading based on CRT is so risky. Also, this was bearish version. For bullish version, rules are completely similar and reversed. Moreover, let me show you some popular CRT patterns. For example, in this instance, which is a bullish version, we can see that second candle's body is not lower than the first candle's lowest point, and also third candle's body is higher than the highest point of second candle, and we see that all conditions are confirmed, and after this pattern is a good opportunity to go for long position. In next pattern we can see that at first there is a range red candle followed by a bullish red candle that sweeps below the range, but the body of second candle is not lower than the range candle. Then price forms multiple candles until it closes above the range. In this instance, we saw that the range was formed and liquidity moves from a candle to another, and last candle reaches the highest point of range candle. In third pattern, we can see that at first range candles form, then it takes several candles to reach the candle that crosses the lowest point of range candle. After that, price immediately changes the downtrend to uptrend and heads toward the range candle's highest point. This situation is the optimum opportunity to go for a long position. Additionally, I brought you some real-time examples to grasp the information about the candle range theory entirely. The first example is from Bitcoin market, and as you can see, the last two candles structure is so similar to one candle range theory structure, and as you can see, the body of second candle doesn't overlap and crosses the lowest point of first candle. Let me draw the highest line and lowest line of first candle. And also we should draw another line at the highest point of second candle in order to, if the next candles cross it, we can predict the next trend easier. So after that we change the time frame from a weekly time frame to daily time frame. Yeah, let me change it to daily, and we can see that the last candle is so close to the lowest point of first candle, and as I mentioned earlier, in CRT structure there is two liquidity, and the first liquidity was downtrend and it approximately touches the lowest point of first candle, and now we expect the next candles in next days to go for higher levels and change the downtrend to uptrend. So we will go for a long position, and let me use it and set the stop loss a little lower than the lowest point of first candle, and also set the uh, target lower, upper than the midpoint. And also, if we use Fibonacci, let me use Fibonacci for further confirmation. If we use the Fibonacci and this is our swing high and this is our swing low, we can see that whenever it comes to this point, which is so approximate to the half, which is one of the golden ratio, it is so a strong signal. And let me eliminate the Fibonacci. So we expect that in next days price will increase, and we open our long position, and we can see that in next days price has increased as we expect. So it shows and proves how strong can a CRT be. And let me review this one more time. At first, in the weekly time frame, we saw the CRT structure, and we predict that after the first liquidity, which was the downtrend, and the last candle touches the lowest point of first candle, we expect and predict that the next liquidity is uptrend, and it can approximately go for higher than the midpoint or the highest point of second candle. And as we can see, our prediction was 100% accurate. The second example is from gold market, and as you can see, the last two candles structure is so similar to the CRT structure, and the second candle's body doesn't overlap or go over and upper than the highest point of first candle. So we will use CRT or candle range theory to predict the next move of market. As I mentioned earlier, at first draw two lines at the highest and lowest point of first candle. Let me, and then we will draw a line at the lowest point of second candle, and it will help us to predict the next move of market easier. So then, as I mentioned earlier, we will change the time frame from weekly to daily to observe and analyze the next candle more easily. And after seeing the daily market, we can see that the uptrend approximately touches and go and pass the highest point of first candle. And at this situation, we can expect the market to go for a lower price, and we will go for short position from here. And I put the stop loss a little higher than the highest point of this candle, and put the target a little lower than the middle point or the lowest point of the second candle. And we can see that in next days the price was decreasing, and our prediction was 100% accurate at this time. And also we can see that after the price touches this line, I believe that this line is so important, and after touching this line, we can go for another trade. And if we use the Fibonacci here. Fib retracement. The last candle approximately touches the lower point of 382, and it shows that it is a good point if you want to go for long position. And if we open the long position here, we can expect the price to go a little higher than the highest point of first candle, and we put the stop loss a little lower than the lowest point of this candle. And we can see that in next days the price tend to go for higher price, as you can see, and our prediction based on candle range theory was 100% accurate. And this proves and substantiates how candle range theory can help in defining the next trend of all markets, and it is so practical for all of traders, and it can be used by just knowing about some conditions. And also it is so essential to know about that the second candle's body should not crosses and pass the first candle's highest and lowest point, and you can get confirmation by just knowing some condition about CRT. Thanks for watching the video. Hope you enjoy it. If you have any questions related to CRT or support and resistance, or for example candlestick pattern, and any subject related to trading, you can easily ask in the comment box, and I will answer it as soon as possible. Have a great day. Bye bye.